the time to purchase Bitcoin is still early if you are doing so now. My opinion is that it is not too late. Therefore, if you have no exposure to Bitcoin and you feel as though you have missed out on something, you should know that 95% of investors have no exposure to Bitcoin. Therefore, if you buy Bitcoin today, you are still in a way ahead of the game. If you compare Bitcoin wallets to the internet, you will notice that we have returned to the levels that existed in 1996. In 1996, the internet saw a meteoric rise, so we are still in the very beginning stages. 195% of investors do not have any exposure to Bitcoin, and they also do not have any exposure to XRP. Therefore, that is the reason why I am playing the clip that Tom Lee created here in today's video and breaking it down with you guys. To tell you the truth, I do believe that Bitcoin is a solid, decent investment, but I believe that XRP is one that is tenfold better. And I think this July, this month, is going to be more explosive than other previous months. And it's a great opportunity than other previous months due to the fact that, simply put, we have an opportunity to accumulate it at a very attractive price before rate cuts do happen towards the tail end of the year. If someone told you that you could get XRP for a price that was 1/10 of what it is currently worth, and that it would be at 3 months every single day, would you not take advantage of that opportunity? To tell you the truth, I believe that this is the chance that we are currently in possession of. And as a result, I am not going to let it slip through my fingers. During my conversation with XRP in November, I was right about this. I had a conversation with the election super cycle. There is no doubt that the price of XRP increased by a factor of 6 throughout the months of November, December, and January. Certainly, there was a correction from the peak price of $3 down to the current level that we are at. And while it is true that we have been trading in a sideways fashion for some time, I would like to bring to your attention the fact that I have been discussing and purchasing XRP for a period of 2 years prior to the occurrence of that election supercycle. I had lump sums that I had from 4 or maybe 5 years ago when I acquired XRP during the bear market that came before that bear market. I was buying XRP on the markets every single day, and I had those lump sums. Having said all of that, I would like to hear what Tom Lee has to say here, because he does have some interesting points to make regarding the future of finance, the debt of the United States, and cryptocurrency, all of which are included in the video that I am playing today. Make sure that everyone sees it by slamming that like button. Keep up with the show till the very end. Let's get down to business. In what way do you anticipate the market to behave in the second half of the year 2026? And what is your overall opinion of the market, where we are, and where we are currently in the year 2025? The stock market was confronted with a black swan event due to the fact that the day of tariff liberation was a surprise. This event caused a negative cycle in which equities fell by 20% at the fastest speed, which was one of the fastest paces in 100 years. In the course of human history, there have been only 12 instances in which the speed and volume of a stock's decline have been comparable. And I believe that the mistake that a lot of people made was that in response to that shock, they became pessimistic. As you indicated, we did believe that there would be a correction this year. Nevertheless, I believe that we did not turn bearish, despite the fact that this was a significant decrease, for 3 reasons. To begin, we were not anticipating that President Trump would adhere to the provisions of the tariff. Consequently, despite the fact that they initially said that this was the contract and that everyone had to accept it, we anticipated that they would eventually reverse those terms, which is exactly what the situation has transpired. Moreover, what we have observed up to this point is that the tariffs are significantly less severe than the majority of people believed they would be at the beginning of the year. As a result, we are in a more favorable position. The second point is that a great number of economists have persuaded you that there would be a recession. Do you recall that all of these economists predicted that a recession would occur and that this was the reason why everyone went into a panic and sold their stocks? On the other hand, we do not always pay attention to economists. Our preference is to keep an eye on the performance of the high yield market. Even while it was experiencing some volatility, the high-yield market really reacted in a manner that indicated there was a possibility of a growth scare going on. It is important to note that a recession is not the same thing as a development worry. For everyone, a growth scare simply means that they become cautious, which is quite normal. In addition, the third reason we did not adopt a negative stance is that waterfall declines, such as the one we observed, typically occur in conjunction with a V-shaped recovery. The idea that this would be a V-shaped bounce was based on this particular point. In point of fact, we were very persuaded of it due to the fact that the VIX, which is a measure of volatility, made a significant spike to 60. And if you look at the past 35 years, whenever the VIX has risen above 60, regardless of what you think, you have to buy the stock market because that is a terrifying situation. Due to the fact that the market is so terrified, they are not pricing anything, which is why you are required to purchase that. As a result, the stock market had a V-shaped rebound. A significant number of individuals continue to have a gloomy outlook despite the fact that we are practically back to the previous highs. Perhaps you guys in the crowd are still holding a gloomy outlook, and I don't see why the stock market has recovered. However, at this time, I do not feel like investing in the stock market. On the other hand, here is something to bear in mind. We have already experienced a 20% decrease as of the year 2025. It is quite unlikely that there will be a 10% decrease between now and the end of the year. It is possibly possible that it is 0% according to the statistics. The stock market might trade in a sideways direction for a short period of time, but the likelihood of us seeing a decline once more is extremely minimal. At this time, the Federal Reserve is not lowering interest rates. In addition, Federal Reserve Chair Powell stated that he will not be lowering interest rates since he anticipates that tariffs will lead inflation to increase throughout the course of the summer. It's possible that this makes some sense. To put it another way, if someone were to say that to me, I would respond by saying that I am aware that the increase in pricing is due to increasing tariffs. On the other hand, this is not the way that monetary policy should be handled in practice. Supply shocks are something that the Federal Reserve is intended to ignore. Therefore, if there is a supply shock, such as a tax, and it creates a one-time increase in price, the central bank is not meant to adjust monetary policy for it. This is because the Federal Reserve is attempting to control demand. If there is such a high demand for something that it causes prices to rise, then they will attempt to tighten monetary policy in order to counteract the situation. Nevertheless, because tariffs are more akin to a supply shock, the Federal Reserve need to give it some serious consideration. The bond market is finally coming to the realization that this is the case. The bond market did not agree with the Federal Open Market Committee during their meeting on Wednesday. They are of the opinion that the Federal Reserve should not be on hold, which is the reason why interest rates have actually decreased during the past several days. And this is exactly the argument that we have been making, which is that the Federal Reserve, if they are not cutting, will have to cut even more in the next year. Perhaps more crucially, the majority of people believe that the only reason for stock gains is because the Federal Reserve is relaxing, which adds liquidity. People were claiming that the stock market couldn't bounce because the Federal Reserve wasn't going to supply liquidity, which is why the stock market was at its lowest point in April. Guess what, however? There was a V-shaped bounce that we had regardless. This demonstrates that the central bank is not required for the stock market to experience a rally. We believe that they will make significant cuts in the following year, which should be beneficial to the stock market. Regarding positioning, I don't believe you truly conveyed our perspective on the many industries that we would be operating in this year. Our most important calls at the beginning of this year were in the areas of technology, financials, and industrials.